trade that I use. Looks like you have $1,000 credit limit. Let's call Sweet Talk Credit Card Company. They'll raise it, let's just say $4,000. That helps your score immediately.
Hey, this is Betsy Stubblefield, Weichert Realtors Big Dog Group, here with my special guest, John Phillips from FirstBank. How you doing?
Doing fantastic. How about yourself?
Doing well.
Good.
The market is rocking.
It is. It is rocking along.
Yeah.
No doubt.
We love it. So I want to talk to you a little today about some myths around if people qualify or can they qualify. I had somebody the other day ask, if they had a bankruptcy on their record, do they qualify? Can they still get a loan?
Absolutely.
So kind of go through,
Sure.
some of that.
First thing we look at is a Chapter 7 or is a Chapter 13 when it was discharged and when it's dismissed. We go through those areas, and in most cases, we can get someone into a mortgage just several years after the bankruptcy. There are some exceptions where we can do it quicker than that, and we just have to look through it and look at the whole picture, look at the bankruptcy papers in depth. But we work with someone to help them navigate through that. One of the biggest things we do is after someone has a bankruptcy, things are wiped out in most cases, especially in a Chapter 7, and we help them establish new credit. We have vendors out there that we can send them to where they can establish new credit very quickly, whether that's through our bank or through Visa. We have some special connections there. And establishing new credit, they are shocked at how fast their credit score goes up.
Wow.
Before you know it, we get them into a home.
Yeah.
We run into this with foreclosures too. You know? So a lot of folks think, hey, I've got to wait 7, 10 years. No. With a conventional loan, 7. But we look at some other of our loan products, and we're looking at as early as 3 years.
Wow. Okay. So what about if somebody wants to borrow money for their down payment? Is that allowed?
Well, it's not. If they're going to be getting let me rephrase that. If they're looking at doing a personal loan, you cannot do that.
Okay.
But what we try to do is, do you have family that can help you with that if you need a down payment? And then another thing we might do is look at how much collateral do you have in your vehicles. We'll use that method. But sometimes the best method that we use is saying, hey, time out here. Let's look at some of our 100% products. Let's look at our USDA loan, which is 100%. Let's look at our THDA loan, which is 100%. Are you a veteran? We appreciate you as a veteran. We have a 100% loan. And by the way, with a VA, you only wait 2 years after a foreclosure in order to get a home. We have conventional products to where we can, team up with Freddie Mac, use our Borrower Smart, Borrower Benefit, and they can get into the home zero down there.
Let's talk about some credit therapy. How can people improve their credit? Because lots of times if you're renting, you probably have a low credit score, and that's why you're thinking, I don't qualify. So what are some things people can do to actually raise their credit rates pretty quickly so that they would qualify?
Yeah, Fannie Mae announced recently that, they're going to start putting rents on the credit report to help borrowers future qualify for homes or qualify for homes. That's a big step in the right direction. I would say the biggest thing, though, is to have someone come to me first and let's pull credit, which is free. Let's look over the credit report together, and I will point out things that you need to do, whether it's pay off some of these collections, let's pay this down, let's pay this off, let's make sure we don't close any accounts. That's the biggest thing a lot of people do is they're like, hey, I finally paid off the credit card, I closed it.
Close it,
Yeah, that's bad.
Yeah.
So that'd be like you working at a job for many years, and then on your future resume, you couldn't put that job down. So I have a lot of people that are gung-ho, and they'll go, hey, I did what you said, John, and my scores are higher. And then I'll have some people that'll call me every few months and go, hey, let's pull credit again. I'm like, hey, did you do what I asked? And they'll be like, no. Well, I mean, I'll pull it, but it's not going to help you.
Probably going to look the same.
You've got to head in the right direction. And you don't need a lot of money to do that. Adding credit cards is a big thing. And a lot of times they're so disgusted with credit cards when they first visit me, they don't like that idea. But this is just a Band-Aid situation. These are Band-Aid credit cards, I call them. and I'll help them get the credit cards, and then I'll advise them, by judging. I can look at the credit report and normally know their spending habits, and I'll be like, don't take this credit card out with you on a Saturday night. Let's just use it for gas purchases, and then pay it off every month. And after 90 days to 120 days of using those credit cards, and also paying down or paying off the things that I asked, their credit score skyrockets.
Yeah.
And they're able to get their credit score where it needs to be. Whether it's a 640 for USDA, THDA, or an FHA, not quite as high.
Right. So one of the things that even I didn't know this back until just a few years ago is, when they talk the credit limit versus how much credit used. So if you have a credit card that has like a 10,000 credit line, but you've used 8,000,
that's not good.
Yeah, you don't have a lot of that wiggle room in there, and that's really bad. Where if you keep it really low, even though your credit limit is up here, you've got all this unused credit, and that helps your credit score go way up.
That's right.
Very quickly.
It does.
When my husband and I first got married, he had a lot of credit card debt. So I was getting all of these 0 APR, for 6 months, or 0 APR for 24 months. So I took all of his debt on his credit card and put it on my credit cards that I was getting all of these applications in the mail and stuff. That was a big thing about 20 years ago.
Sure.
So I was getting all of that on these 0 APR, and we were just absolutely just cutting out the debt,
Yeah.
And we did. It took us about 2 years, and we got it all paid off.
That's awesome.
But then some years later, when we went to build our house, his credit score was higher than mine. And I was like, wait a minute, what? I'm the one.
It was a risk model that the credit bureaus used.
So they had looked at the fact that I had a lot of credit cards and then closed the account once we got it paid off. And all of that up and down hurt my credit score. So what I've done since then is we have one credit card that I've had, probably 25 years.
Yeah.
That's the one we keep. That's the one we use. We pay it off every month in full. Don't spend more than what you can pay off.
The length of that credit card really helps your score. How long you've had it.
Yes. And I didn't know that until a few years ago, even when I started learning about what are those things that affect your credit score.
Yeah, Equifax, TransUnion, and Experian.
Yeah.
And those are the three main companies that we look at, and we normally take the middle score. But each one has their own algorithm.
Right.
So that's why if you have a credit card, it reports to all three. But why do you have three different scores? Because they use this equation algorithm to give your rating, which is a score.
Yeah.
It's interesting how they do that, and length of time that you've had that card plays into it, and where the overall debt to income where the overall loan to value, I should say, is. So it's important that you keep those under 40%. I think that's important. But sometimes it can be confusing when I'm trying to help someone right out of the gate. We're just trying to establish credit, and they're like, "Hey, one of the biggest questions I get, do I pay that off like as soon as possible, or do I wait?" And really, what I tell people, look, we're just trying to get you a score right now. We're not really fine tuning everything. Once we get to that fine tune process, I really want you to keep everything, 40%.
Yeah.
But before that, I'm like, dude, just use it, and then when the credit card payment is due, make sure it's paid on time, because therefore you won't pay any interest on that statement balance, even though your overall balance will be higher than the statement balance. Okay, so that's going to roll over into the next month. But by doing this, all the credit bureaus get their reporting from the credit card companies on different days throughout the month.
Right.
Normally it's the first 2 weeks of the month, but they're seeing that number change. High, low, medium, all throughout for that next 30 to 120 days, and that makes it easier for a score to pop up.
Yeah.
Makes it quicker for us to get you a home.
Yeah. Yeah, there was my husband and I bought a kayak trailer, a customized trailer for
Nice.
one of our kayaks.
I'm selling my
And
kayak. this
is that
weekend,
right?
Yeah.
Right, yeah. So we put the purchase on the credit card because they get 1% cash back. Or
Yeah.
and I was like, yeah, let's do that. My credit score dropped 30 points.
Yeah. No doubt.
because
That's a bummer.
because our our credit used
Yeah.
went much higher than what it normally is at
Mhm.
because we put that trailer on there.
That's right.
Even though I was planning on paying it off, we had the money, but I said, let's do it on the credit card. I was like, ooh, when I seen my credit score drop 30 points, just like that, I was like, ouch, we won't
Yeah.
be doing that again.
That's right.
Yeah.
And it's amazing once your credit score gets higher and higher. So if it goes
Yeah.
from 640 and then the next year to say 660 and beyond, once it gets over 700, it's so easy for that score to fluctuate,
Yeah.
and it fluctuates much slowly when it's on the lower scale of things.
Mm-hmm.
There's a trick of the trade that I use, and I'll have a situation where I'm trying to get a borrower approved and try to get their credit score established and get that score higher. It's like, let's do this. It looks like you have $1,000 credit limit. Let's call and sweet talk the credit card company into going to $5,000. And I only do this if I think the borrower is disciplined. And they'll raise it, let's just say $4,000. That helps their score immediately, even though the balance didn't move.
Mm-hmm.
So it's a neat little trick out there. It works too.
Yeah. So if somebody's kind of got doesn't even know what their credit score is, how do they get their credit score?
Well, the best thing to do is just call me, call my office, and we'll be happy to help you out with that.
Yeah.
Like you got to be wary of Credit Karma and some of those
Mm-hmm.
companies out there, and
Mm-hmm.
and I think they work really well as a guide, but sometimes they don't work well. We do what's called a hard inquiry, which everyone hears is bad. But you don't want to have too many hard inquiries, and that's true. But what Credit Karma and some of the other companies do is a soft inquiry.
Mm-hmm.
So basically, they just look at your debts and they guess on what the credit company's score will be. They don't know. So when you see that score, that's made up basically. It's just estimated. And I have this conversation probably almost daily, where I'll pull a score for a borrower and say, "Here's your score. It's a 690." They're like, "No, it's not. Credit Karma says it's 720."
Mm-hmm.
Well, Credit Karma doesn't know. Guess what? We do.
Yeah.
We're seeing it real time, and there's some disappointment there, but it does work as a guide. But just be careful. I mean, Credit Karma is out to sell credit cards.
Right.
That's what they're out to do,
Yeah.
and they kind of use that as a bait.
Yeah, definitely. Well, we're going to wrap up here today. Thank you so much for joining in with us. And check out next week, part 4 of this series with John Phillips at FirstBank.